Well, good afternoon. James Preston with you live from 𝐊𝐿𝐴 Studios in Sydney. And it's lunchtime here, and you know what that means. It's time for the mid-market pulse. Let's zoom our lens on the Australian share market performance midway through the day. Australian shares continue to trade lower by the afternoon, led by losses in banking, mining and retail stocks. Weak global cues and alarming COVID-19 surges in the country have been responsible for denting the market sentiment. The announcement of the extension of lockdowns in Victoria and the rise in the daily case tally has left investors somewhat jittery. The S&P ASX 200 was trading lower by 81.6 points or 1.1% by lunch. Earlier today, the index opened lower, tracking weak cues from Wall Street to decline by as much as 1.3%. Concerns about the COVID-19 situation in the country have continued to weigh on the market sentiment. In the last 24 hours, New South Wales reported 98 new locally acquired cases, while Victoria recorded 13 new COVID cases. On the sectoral front, 10 of the 11 sectors were bleeding in red, the drainage led by material and energy stocks. The materials sector was the worst performer with a more than 2% loss, followed by energy, which dropped by 1.7%. Telecom, financial, industrial and materials were trading lower over 1% each. Bucking the trend though, healthcare stocks were the sole gainer, rising 1.25%. The IT sector also extended its losses for the fourth consecutive session, as renewed concerns about the global economic outlook seem to spook demand for growth-driven stocks. And with that in mind, let's take a look at the biggest individual winners and losers from the performance so far today. Shares of software firm Altium was the worst ASX performer, falling nearly 11% amid a report that American software company Autodesk has withdrawn its $38.50 per share takeover offer. Some of the other top gainers, or losers should I say, were Chalice Mining, Evolution Mining, PointsBet Holdings and Oz Minerals. On the flip side, healthcare firm PolyNovo was the top gainer on the ASX, rising just over 4%. Some of the other notable gainers were Datira Royalties, Domino's Pizza Enterprises, Fisher & Paykel Healthcare Corporation and also ResMed. Now to the stocks that are generating a buzz, and fintech firm Humm Group saw its shares jumping over 3% to $1 apiece. The buy now, pay later player reported strong earnings in the June quarter. The consumer finance company continues to benefit from increased market penetration and also brand awareness across key verticals. The transaction volume of the company rose 57% to $774.9 million in the fourth quarter of the current fiscal year, while the buy now, pay later segment transaction volume jumped nearly 69%. Meanwhile, Australia's leading buy now, pay later players, Afterpay and 𝐲𝐿𝐴, were also trading higher, snapping a 3-session losing streak. Personal lender Wisr had its shares rise nearly 4% to 27.5 cents after the company delivered its 20th consecutive quarter of growth. The non-bank lender said in an exchange filing that it continued its trajectory of uninterrupted growth by reporting a 193% growth in new loans in the June quarter of fiscal year 21 compared to the same period last year. Time now for a short break on 𝐊𝐴 TV, but more buzzing trends on the other side of these messages on the Mid-Market Pulse.
Crypto talk by 𝐊𝐴. The crypto market has been red hot given the Bitcoin rally since the past year. And now the most famous cryptocurrency has got competitors: Dogecoin and Ethereum. If the crypto market excites you, tune in with me, Sage, to know the latest developments about the existing digital currencies and the new ones that are joining the race. I'll help you understand the opportunities and the risks the crypto market has in store for you. For all the digital currency related developments, continue watching Crypto Talk by 𝐊𝐴.
Welcome back. Great to have your company on 𝐊𝐴 TV. James Preston with you live from Sydney for the Mid-Market Pulse. Let's continue with another stock that is creating a buzz today. The share price of 𝐊𝐿𝐴𝐻 climbed nearly 9% to 23.5 cents after the human resources software business reported robust growth in its June quarter. In the fourth quarter ending June 30, 2021, the company reported an operating cash loss of $1.6 million. But the company recorded over $1 million in new contracted business for the first time in its history. Shares of Perenti were also trading higher, over 1% to 87.5 cents after the global mining services group secured a new contract. The company said that AMAX, a joint venture between Perenti's surface mining business in Africa, African Mining Services, and leading Ghanaian mining services company Maxmas Limited, has been awarded a new contract worth $470 million. The contract is valid for 5 years for mining work at Anglo Gold Ashanti's Adua Premium gold mine in the western region of Ghana. The new contract is structured as a 60-40 joint venture agreement between AMS and Maxmas, and the agreement represents African Mining Services' significant and ongoing commitment to developing and expanding the capacity and capability of their local partners. The share price of property development firm Stocklands drops over 1% to $4.34 on the back of an announcement of plans to buy HealthCon Group's land lease community business. The company has entered into agreement to buy Queensland-based 𝐊𝐴𝐻 Group's land lease communities business for $620 million plus transaction costs. The deal includes 3,800 sites across 13 land lease communities, made up of 6 established land lease communities, 4 communities in the development, and also 3 projects in planning. Stockland will fund 100% of the acquisition price and associated costs from existing liquidity. Moving on, in Ioneer, shares fell by 0.6% to 40.2 cents. The lithium chemicals producer issued a water pollution control permit for its Rhyolite Ridge lithium boron project in Nevada in North America. The assessment and issuance of the water pollution control permit involved in a detailed review of the project by the State of Nevada Division of Environmental Protection includes an assessment of the impact on surface and also subsurface water during and after the closure of the operation. Water usage at Rhyolite Ridge is around 30 times less than that required at the only existing US domestic lithium production operation. Water usage is low because the project recycles and reuses its own water. Moving on, and shares of telecom company Telstra Corporation have slipped over 1% to $3.73 after the company confirmed its interest in Digicel Pacific. In an exchange filing, the company said it has been in discussions regarding a potential transaction to acquire the telecommunications company. Digicel Pacific is of course from the South Pacific region, and in partnership with the Australian government, the deal is looking like it is likely to go ahead. It further stated that the discussions are incomplete and there is no certainty that a transaction will proceed, although they do remain hopeful. Digicel Pacific was founded in 2006 by Dennis O'Brien, an Irish entrepreneur, and is a leading provider of communication services across Papua New Guinea, Fiji, Nauru, Samoa, Tonga, and also Vanuatu. It enjoys a strong market position in the South Pacific region. And now it's time for a very short break on 𝐊𝐿𝐴 TV, but stay tuned as I'll be back with more trending updates in just a moment for the mid-market pulse.
Property by 𝐊𝐴𝐻. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐴𝐻 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐴𝐻.
Welcome back, James Preston with you live from 𝐊𝐴𝐻 Studios in Sydney, and you're watching the Mid-Market Pulse. We're taking a look at ASX listed stocks that are in the news today. Let's now turn our attention to software player Altium, who have entered into a trading halt pending a further announcement. As per the media report, American software company Autodesk has withdrawn its $38.50 per share takeover offer. The share last traded at $32.73, down 3.8%. 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 has surged as much as 28% to 41 cents after energy and resources sector contractor received a takeover bid from Altrad. The company has received a 41.3 cents per share conditional cash takeover from Altrad itself. The deal includes the acquisition of 98% of the issued shares in 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 by way of a scheme of agreement subject to shareholders and court approval. It's expected that the scheme will be voted on at a 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 shareholders meeting in mid-October 2021, with the implementation of the scheme expected to then occur in late October 2021. And just before we take a look at the global equity market performance, the final stock making headlines is IT services firm Empire, who surged over 60% to $1.30 per share after its board recommended shareholders to accept a $1.35 a share cash takeover bid from consulting group Capgemini. The deal values the company at $233 million, and the scheme consideration represents an attractive premium of 64.6% to the Friday's closing price of 82 cents. The Empire directors have unanimously recommended that shareholders vote in favour of the scheme in the absence of a superior proposal, and that the scheme is in their best interests. Alright, now let's glance at the global equity market. And on Friday, the US stock market ended lower as concerns about rising inflation kept investors quite cautious. The Dow Jones lost 0.86%, the S&P 500 dropped 0.75% also. The tech-savvy Nasdaq composite fell by 0.8%, and all round it wasn't a particularly good day for American stock exchanges. Let's now turn our heads though east to the Asian markets, and most of the regional stocks were trading lower in opening deals, tracking weak cues from Wall Street. Japan's Nikkei was the worst performer in the region, falling nearly 1.4%, while China's Shanghai Composite was also down 0.25%. Seoul's Kospi traded lower by 1%, and in a similar trend, Singapore's Straits Times was down 0.9%, while Hong Kong's Hang Seng traded lower by 0.8%. Well, that's all for now, but keep watching 𝐊𝐴𝐼𝐴 TV as we bring you the latest news and trending market updates live from Sydney. I'm James Preston for 𝐊𝐴𝐼𝐴 TV.